Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back, and thank you all so much for being here. It is December 1st, so the countdown to Christmas is officially on. This morning, we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Make sure you've downloaded the TipRanks mobile app as well, so you can stay up to date with all the latest market news and what's going on in your own portfolio right on the go. The links will be in the description down below. Now let's get right into this morning's exciting stock market news. U.S. stock futures are mixed this morning. This comes after they saw some sizable gains yesterday following confirmation from Jerome Powell that we would likely see a lower pace of rate hikes to battle inflation in the coming months. We now are awaiting a couple sets of economic data in the next couple of days. Right now, Dow futures are down 0.06%, S&P 500 futures are up 0.07%, while Nasdaq futures remain flat. Chinese EV maker XPeng went a little crazy yesterday. The stock went on a tear after they missed expectations on their earnings report. They ended up 47% up on the day. Now this morning they are cooling off a little bit after the company announced that they had deliveries that were down 63% year over year. They reported deliveries of over 5,800 EVs in November, down from over 15,600 in the previous year. But as of the end of November, their year-to-date deliveries reached 109,465. That did represent a 33% increase year over year. They're now expecting their deliveries will significantly increase in December as their G9 production ramp-up accelerates under normalized operating conditions. Analysts currently rate the XPeng stock a moderate buy with an average upside of 60%. On the other hand, we have NIO and Li Auto. Their stock is up not quite as drastically, but still respectably, after they reported record high deliveries for November. Li Auto delivered over 15,000 vehicles in November for an 11.5% year-over-year increase. Their cumulative deliveries have reached over 236,000 for the year so far. While NIO delivered over 14,000 vehicles for the month, which was up 30% year-over-year, bringing their yearly total to about 106,000 vehicles. The Li Auto stock is currently rated a strong buy with an average upside of 41%, while the NIO stock is also rated a strong buy with an average upside of 57%. And Ford is looking to boost their EV power unit capacity at their UK plant by 70% with an additional $180 million investment. This investment will help the factory produce 420,000 electric drive units per year, up from 250,000 initially planned. The chairman of Ford UK said that this is an all-important next step for Ford towards having 9 EVs on sale within 2 years. Our UK workforce is playing a major role in Ford's all-electric future, demonstrated by Halewood's pivot to a new zero-emission powertrain. The Ford stock is currently rated a moderate buy with an average upside of 22%. Now moving over to notable earnings reports. In the after hours today, we'll be hearing from Marvell Technology, ChargePoint Holdings, Ulta Beauty, Scalar, and UiPath. Now we're going to start off with earnings from last night and then get to this morning's later, as we had some big movers in the after hours. We're going to start off with Snowflake. Their stock plunged nearly 14% at one point. It's calmed down to about 6% now, despite beating on earnings and revenue. They said that their revenue for their product could slow in the next quarter. For their fourth quarter, they're saying that they could have a growth rate of 49 to 50% year over year, which seems impressive, but it is well below the 67% that the company saw in this third quarter. For their Q3, they reported earnings per share of 11 cents, which was 6 cents ahead of analyst expectations, and revenue of $557 million, which was 18 million ahead of estimates. Analysts do currently rate the Snowflake stock a strong buy with an average upside of 49%. Then we have Salesforce. Their stock is also down in the pre-market despite beating on earnings and revenue after the company announced that their co-chairman, Brett Taylor, would be leaving the company. Taylor stated that after a lot of reflection, I've decided to return to my entrepreneurial roots. His resignation will be effective January 31st. Salesforce reported Q3 earnings per share of $1.40, which was 18 cents ahead of estimates, and revenue of $7.84 billion, 10 million ahead of estimates, and 14% growth year over year. Analysts currently rate the Salesforce stock a strong buy with an average upside of nearly 30%. On a more positive note, we have FiveBelow. Their stock is actually in the green after their earnings nearly doubled expectations. They beat on revenue and increased future forecasts. Q3 earnings per share came in at 29 cents, which was 14 cents ahead of estimates, and revenue of $645 million beat expectations by nearly $31 million. Their CEO said that we are continuing to play offense, and the progress we made across product, experience, and supply chain will all drive our holiday execution. Analysts currently rate their stock a strong buy with an average upside of 9.5%. And Splunk was also in the green in the after hours after they beat earnings and revenue and raised their future outlook. Their earnings per share of 83 cents came in 58 cents ahead of expectations, so just crushing the estimates there, and revenue of $930 million was up nearly 40% year over year and $83 million ahead of estimates. Analysts currently rate the Splunk stock a moderate buy with an average upside of 45%. All right, now moving to the pre-market this morning, we do have grocery chain store Kroger. They did beat on both earnings and revenue. Their revenue came in at $34.2 billion, which was $280 million ahead of expectations and a growth of 7% year over year. Earnings per share came in at 88 cents, which was 6 cents ahead of analyst estimates. Analysts do currently rate the Kroger stock a hold with an average upside of 4%. And we also heard from Dollar General. Their stock is down after they missed on earnings but did beat on revenue. Their Q3 earnings per share came in at $2.33, but was 21 cents shy of analyst expectations. Meanwhile, revenue came in at $9.5 billion, which was up over 11% year over year and $70 million ahead of expectations. Their stock is currently rated a strong buy with an average upside of 13%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Okta after they posted better than expected results for their third quarter and had an impressive Q4 forecast. Trading under the ticker OKTA, the stock is up over 17%. They're followed by HUTCHMED under HCM, up 9.5%, and FiveBelow under FIVE, up 9.4%. And our biggest losers this morning are led by Elastic following their Q2 results. Trading under the ticker ESTC, their stock is down over 14%. They're followed by Lionheart Acquisition under MSPR, down 12.6%, and Sassel under SSL, down 10.6%. So that is going to be everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to say good morning in the comments down below. I always appreciate hearing from you guys, and make sure you downloaded that TipRanks mobile app. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.